Today's podcast episode of Simple Mind Space focuses on the future of Bitcoin and its potential as a global reserve currency. The discussion is based on a study conducted by VanEck, a leading investment management firm. The study provides insights into the potential price of Bitcoin by 2050 and its role in the changing global monetary system. The main topic of today's podcast is the potential of Bitcoin to become a global reserve currency and its implications for the future of finance. The podcast host, Simple Mind Space, aims to help people master their money and their minds by providing clear and actionable advice on investing, building wealth, and making smart financial decisions. The host also emphasizes the importance of mindset, discipline, and personal growth in achieving financial goals and unlocking one's full potential. In the podcast, the host dives into the study conducted by VanEck, which provides price predictions for Bitcoin in 2050. The study presents three scenarios. The worst-case scenario predicts a price of $130,340. The base-case scenario predicts a price of $2,910,345, and the best-case scenario predicts a price of $52,386,207. While price predictions for such a distant future may not hold much value, the analysis conducted by VanEck sheds light on the direction and potential of Bitcoin. The study suggests that by 2050, Bitcoin could become a significant global medium of exchange and potentially one of the world's reserve currencies. The study is based on the decreasing trust in current reserve assets and the potential of Bitcoin's Layer 2 solutions to address scalability issues. The combination of Bitcoin's unchangeable ownership, strong monetary principles, and improved functionality through Layer 2 solutions could create a more suitable global financial system for developing economies. The study predicts that by 2050, Bitcoin could be used for 10% of global international trade and 5% of domestic trade. Central banks could hold 2.5% of their assets in Bitcoin, driving its price to $2.9 million. The overall market capitalization of Bitcoin could reach $61 trillion, with Bitcoin Layer 2 solutions valued at around $7.6 trillion, accounting for approximately 12% of Bitcoin's total value. The podcast highlights the current trends and changes in the international monetary system, indicating a decline in the dominance of traditional reserve currencies. The relative global GDP shares of current economic leaders, such as the United States, the European Union, the United Kingdom, and Japan, are expected to decrease, eroding trust in their currencies. Uncontrolled deficit spending and geopolitical decisions further undermine confidence in these currencies, while concerns about asset ownership in Western monetary and financial systems are increasing. The podcast also discusses the current monetary system and the role of Bitcoin. The US dollar currently holds an advantage due to strong fiscal policies, a large share of global GDP, and robust legal frameworks. However, the euro and the yen have experienced significant declines in their global trade settlement ratios, linked to economic downturns in the EU and Japan. As traditional reserve currencies lose influence, Bitcoin is positioned to emerge as a neutral and secure medium of exchange with unchangeable asset ownership. The podcast addresses the challenges and solutions for Bitcoin's future. The current transaction processing capacity of Bitcoin is limited to around 7 to 15 transactions per second, significantly lower than the global trade demand, posing a crucial scalability challenge. Layer 2 solutions such as Lightning Network, sidechains, and emerging technologies like rollups are being developed to enhance Bitcoin's transaction capabilities while maintaining its core principles. These Layer 2 solutions aim to offload Bitcoin transactions onto secondary layers, ensuring scalability and security. The podcast explores the impact of sanctions and the waning trust in traditional reserve currencies. The increasing use of sanctions by the United States and its allies undermines trust in the US dollar and other traditional reserve currencies. The US has been increasingly using sanctions as a geopolitical tool, with the number of entities sanctioned rising by 529% from 2009 to 2022. Sanctions affect entities by restricting their access to the global financial system, particularly through payment networks like SWIFT, CHIPS, and Target 2. Over 35 countries, representing 31.6% of the world's population and 22% of global GDP, face varying levels of U.S. sanctions, contributing to global concerns about the reliability of the U.S. dollar as a reserve asset. The seizure of $300 billion of Russia's foreign exchange reserves by the U.S. and Europe further raises concerns about the safety of holding assets in traditional reserve currencies. The podcast emphasizes the concept of asset ownership and the attractiveness of Bitcoin. The erosion of property rights in many countries raises concerns for investors and the international community. Issues such as arbitrary contract cancellations, civil asset forfeiture, and abuse of land ownership weaken trust in legal systems in many countries. Consequently, many countries and businesses are increasingly concerned about holding assets in traditional reserve currencies, leading to growing interest in alternative assets like Bitcoin, which provides secure and unchangeable asset ownership. The podcast discusses the emerging global monetary system. The Chinese yuan, RMB, is gaining prominence, with its swift transaction ratio nearly doubling from 2023 to 2024, driven by China's increasing use of the RMB in bilateral trade agreements. A multipolar currency system is emerging as the major currencies, USD, EUR, GBP, JPY, lose global influence, with Bitcoin, RMB, and other currencies potentially playing a more significant role. By 2050, it is predicted that Bitcoin's global reserve ratio could reach 2.5%, with its ratio in domestic and international trade potentially increasing to 5% and 10%, respectively. The podcast explores Bitcoin as a reserve currency. Bitcoin's unique attributes, including neutrality, unchangeable monetary policy, and perfect asset ownership, make it a strong candidate for a global reserve asset. Bitcoin's decentralized system replaces traditional monetary authorities with unchangeable logic, ensuring that no entity can dilute its value or manipulate it for political purposes. This decentralized and secure system brings significant value to central banks, investors, and participants in global trade, providing a storage of value that cannot be arbitrarily seized by governments. The podcast highlights the valuation of Bitcoin's Layer 2 solutions. If Bitcoin becomes a reserve asset, Bitcoin Layer 2 solutions could capture 50% of the smart contract platform market, resulting in an estimated value of around $7.6 trillion for the entire Bitcoin Layer 2 ecosystem. These Layer 2 solutions would enhance Bitcoin's utility by enabling smart contracts and other advanced financial functions, further solidifying Bitcoin's role in the global financial system. The podcast acknowledges the risks associated with the future of Bitcoin. The sustainability of Bitcoin mining, energy demands, and Bitcoin halving could impact miners' revenue. Failure to scale effectively could hinder Bitcoin's potential to become a primary medium of exchange. Competition from technologically advanced cryptocurrencies could challenge Bitcoin's dominance. Internal conflicts within the Bitcoin community could lead to hard forks and division in the value of Bitcoin. Government bans and attacks coordinated against Bitcoin could significantly impact its adoption and long-term existence. Increased control by financial institutions could change Bitcoin's culture and policies, potentially disadvantaging long-term holders. The risks of theft and cyber attacks remain significant, especially as the attack surface expands with the development of Layer 2 solutions. A financial attack on Bitcoin's economic system could disrupt its stability and value. Core software vulnerabilities, while necessary for upgrades, could introduce new threats to its long-term success. In conclusion, the potential of Bitcoin to become a pillar of the global financial system by 2050 depends on overcoming scalability challenges, maintaining its core principles, and navigating a complex landscape of economic, technological, and geopolitical risks. The increasing use of sanctions and the erosion of asset ownership in traditional reserve currencies drive the search for alternative assets like Bitcoin, which offers a secure, decentralized, and unchangeable storage of value for international trade.